Hello, this is John Belizaire, CEO of Soluna Holdings. We recently filed a proxy statement in preparation for a special meeting of our shareholders. The main proposal in the proxy aims to increase Soluna's authorized common shares. I would like to take you through some frequently asked questions on the proxy. This FAQ may also be found on our website at solunacomputing.com/investors. A link is also provided below this recording. Before we begin, I'd like to start with a legal preamble. The following content is completely qualified by the legal disclosures on the slide following this one. Our goal is to share with you some of our strategic thinking and financial analysis we are using to guide the growth of our business. The content is in line with our principles of being accountable and transparent with our shareholders. We operate in a hyper-dynamic economic environment. That's a fancy way of saying things change quickly. What we are telling you here is based on our estimates and assumptions, which are our best guess. We reserve the right to revise our point of view based on new information and changes in the business environment. Despite an uncertain dynamic environment, we must plan and make operating and investment decisions, and this presentation lays out some of that out for your review. We're going to pause here for a second. This is the legal disclosure and disclaimer I referenced earlier. Okay, let's get into the frequently asked questions. What is a proxy vote? A proxy vote allows shareholders to cast their votes on key company proposals, even if they can't attend the special meeting in person. How do I vote? You can vote by contacting Alliance Advisors at 1-855-206-1311 or by following the instructions in the email or the mailing that you might have received. You may also vote during the special meeting via the internet at www.proxyvote.com. When is the deadline to vote? If you vote via the internet or by telephone, your vote must be received by 11:59 p.m. Eastern on November 6, 2025. You may also vote during the special meeting on November 7, 2025 at 10 a.m. Eastern via the internet at www.proxyvote.com. What happens if I don't vote? If you don't vote, your shares won't be represented at the meeting, and it may prevent us from reaching the required threshold for approval. So every vote counts. How many votes are needed to approve the proposals? At least 1/3 of the outstanding shares must vote to reach a quorum, and the majority of those shares voted must vote in favor of the proposals to pass. What exactly are shareholders being asked to approve? The main proposal aims to increase Soluna's authorized common shares from 75 million to 375 million, representing a 300 million share increase to our authorized shares. Why does Soluna need more authorized shares? Well, we're nearing our 75 million share limit, a structure built for a much smaller company. As Soluna surpasses 1 gigawatt of projects and scales Project Kadi, we need the flexibility to finance growth and new projects, to form strategic partnerships and pursue potential acquisitions. We need to strengthen our balance sheet. So authorized shares really equates to flexibility, momentum, and responsible scale. Is this a sign of financial distress? No. This is a strategic move, not a reactive move. It aligns Soluna with peers and ensures that the company can act quickly on growth opportunities and partnerships. Does this mean Soluna will issue all 375 million shares right away? No. Authorizing more shares does not mean they'll be issued immediately. It simply gives the company the option to issue shares in the future if and when needed. How does this compare to other companies in our industry? Our peers have far larger share authorizations. Marathon, for example, has 800 million shares in their authorized pool. CleanSpark has 600 million authorized. Cipher, 500. Applied Digital, now a leading AI company, has 400 million shares authorized. Iron has close to 1 billion shares authorized. Bitfarms, which is a Canadian company, has an unlimited number of share authorizations in their authorization pool. Soluna's proposed 375 million remains conservative by comparison. What happens if the proposal isn't approved? Without additional authorized shares, Soluna's flexibility becomes limited, leaving fewer options to fund growth and refinance our debt. The alternatives to this share authorization could include a reverse stock split, raising money at less favorable terms, or borrowing, which could add risk to the company. And we also can resubmit during another special stockholder meeting. Will this dilute my current shares? Well, authorized does not equal issued. New shares are only issued when it drives long-term growth. Dilution doesn't automatically mean loss of value. Smart capital use equals accretion, not erosion. And share issuance is a normal part of growth when invested wisely. How will this impact the stock price? Well, the proposal itself doesn't change the stock price. However, maintaining capital flexibility and competitive positioning can help support long-term shareholder value. Is this related to Nasdaq compliance? No, this proposal is not about maintaining Nasdaq listing requirements. It's about strategic flexibility and future growth. How does this help Soluna's mission? This flexibility helps fund projects like Project Kadi and future renewable computing sites, accelerating our mission to make renewable energy a global superpower. Thank you for listening to this FAQ. And as we enter this next chapter, Soluna's momentum has never been stronger. From Project Sophie to Kadi, we're proving that renewable energy can power the future of computing, and we're just getting started. You can contact us on X, we're at Soluna Holdings. We're also on LinkedIn. Just search for the Soluna Holdings company page. And of course, join our newsletter. We have over 2,000 participants that are getting updated news and the latest updates from the company. You can select that by joining bit.ly/Soluna subscribe. Thank you. Until next time.